I want to announce the panel. We have a panel with Richard Ma from QuantStamp, John from Hypernative, Huilin from EtherRisk, and Adam from Names.
Thank you very much for coming and joining the panel. I think it is not exaggerating to say that we have probably some of the most prominent experts in decentralized insurance sitting here on the panel. And we are super happy that we can have this. And so the topic of the panel is securing the future. How decentralized insurance will impact Web3 and the decentralized industry. And I think this we heard in the recent talks that this is a huge opportunity for many different approaches, products, companies. And of course, while blockchain itself is something which should be safe, from the protocol, from the technology, proven correctness, finality, all these topics. But on the other side, we all learned painfully that blockchain also introduced a lot of new risks which need to be protected. And that also creates a lot of opportunity. But on the positive side, we can also say that blockchain and decentralized insurance also offers new ways to offer products which are simply not feasible in the traditional space, like impact insurance, where the traditional products are either too clumsy, too slow, or simply too expensive. And blockchain is a way to change this. So let's talk a bit on all these different topics. And may I introduce our panelists, John Fiorelli of Hypernative. Hello, John. Then Adam, he has already introduced himself. Then we are very proud to have Richard Ma here from QuantStamp, which is also our main sponsor. Big shout out to Richard and his team, which made this conference possible. And Huilin from EtherRisk Impact, which is the sister company from EtherRisk, which is specifically targeting emerging countries and impact insurance. And welcome, Huilin, and you will also have your talk afterwards. So let's just start with the first questions. I have prepared some questions, and we go round robin, and I start with Richard. And we have heard from Tyler how important it is to protect protocols. And maybe, Richard, you can give us some more of your own insights into the role of automated security protocols. And what is the role of QuantStamp? What is the role of these new products, what you offer, and what also is generally offered in the space?
So I guess, so I'm, really glad to be on the panel. And, EtherRisk and Names are, some of the pioneers of the decentralized insurance space. As kind of head of the security company, pretty much since I started QuantStamp, I think having some additional protection for protocols beyond security audits has always been an issue that our users have asked us for. And so, literally for years and years before the smart contract insurance space got developed, we were getting requests from customers that were saying hey, we have institutions that want to put money into our protocol. Could you help us to talk to some insurance companies and get coverage for us? And so it's been really nice to see the space evolve, but it's still a really big problem today. I think just from the more the security side, often the hacks are extremely large. Often it's tens of millions or hundreds of millions of dollars. If you look at the Euler hack this year, or the Curve Finance hack. And so one really big issue we still see is the lack of a good amount of capacity to cover those types of events. But yeah, it's a very exciting space and still very rapidly developing in terms of having really good companies that are involved. So yeah.
Okay, maybe you give us some more personal insight in what initiated yourself to dive into this topic. And the blockchain space is huge, and probably there have been multiple opportunities for you. And but why did you start with this topic specifically? And what were your somehow inaugural moments where you said to yourself, this is something where I want to work and where I want to invest significant time of my life?
Yeah, I guess like many things that happen at QuantStamp, we have a group of really smart, nice people in the company. And for our foray into smart contract insurance, a lot of it was driven by Sebastian, Peter, Joseph, Tyler from our team. That's kind of where all the experience and passion came from. Obviously, every day we talk to so many security customers, and so they keep asking us for this, and so that was sort of the genesis of kind of the DeFi protection.
Actually, has there been a specific moment in your life which triggered you, and where you said, "Okay, that's my moment. That was where I kicked this idea off"?
Yeah, for me it was like now it's more than 7 years ago. So originally in 2016, I put money into the original DAO, which was hacked for more than $50 million. At the time, there were barely any smart contract security companies, let alone smart contract insurance companies. And so since then, I've always thought that for normal users to get involved in the space, they need a lot more safety and protection. And yeah.
Okay, then let's turn to John. What would you think? Would something like the DAO possible today, or would it be mitigated by you, for example?
Sorry, is
the DAO hack? Would that be possible today? Would something similar happen, and would you be able to detect it early enough?
Well, let's put it this way. I think what's really important is that we have auditors like QuantStamp who are out there as our front line of protection, so that they can determine intrinsically, is a contract safe, or a set of core contracts safe enough for us to play with the protocol. And so could it happen today? I mean, I suppose it could, assuming that that particular DAO chose a different auditor. But speaking on behalf of Hypernative, and just to give a little context, Hypernative is a real-time monitoring service. It really comes into play after the audit, after contracts are deployed and contracts go live. Ideally, even we've done a little testing in a testnet, do a little wargaming, and see if monitoring can help us see what potential pitfalls might be out there. But I would say that anything is obviously still possible, because it's incumbent upon the project to make good choices about preparing their security. Monitoring is intended to help us listen to what is out there, and is really coming front-facing where contracts are deployed. Hypernative seeks to fuzz those contracts, and using its machine learning-based system to determine if a contract is malicious, who it may wish to attack. And so doing, if they've sought good auditing and they've patched those bugs, and most importantly, they let their auditors know if they've made any changes and try and prevent contract audit drift, then hopefully we can prevent hacks like that. I don't want to speak above my pay grade to say I know how the DAO hack happened, but I would say that there's an entire stack of measures that you can take to mitigate that, so that insurers are willing to insure these protocols, and us using them through DeFi protection, things like that. So
okay,
that's my opinion, for the lack of a better one.
Yeah, maybe I have a second question in this direction. I was very early in the crypto space when the DAO hack happened, and I remember very vividly that at that time the team around Christoph Jensch, which is also a good friend of us. They deployed the DAO contract, and then they tried to verify it on EtherStack. So they tried to verify that the source code and the deployed bytecode is actually the same, and it took them 2 weeks because they had lost track of their source, and they didn't know exactly which commit they deployed. So it was very difficult for them to do it. So obviously at that time the tooling was not very good. Yeah, and would you say that the tooling and the technology to detect faults, to detect bugs, and to detect see if anything is wrong, is that already sufficient today, or are there any challenges? Where we would say, okay, that's still a big issue where we have no insight, or where we are have a heavy time to actually see what's happening in this evolving and complex area of smart contract?
I would say that Richard is probably a better expert on this particular topic, but one thing I would say is when you're doing an audit, we assume that there's a freeze and that we stop working on it for a bit so that we can see what's actually there, and that there aren't, that we're not trying to analyze the plane while we're flying it, right? So I guess all I would say is that we're in a much better place now. There are more auditors, and it's good to have a vibrant market of service providers, so that we're not all looking at it the exact same way. I also think that it's great to have a vibrant community of multiple monitoring services, although I'm a little biased, so you forgive me there. I think that at this time we're in better shape, but to say that we're there and that we can be overly confident in tooling to solve our problems, I think might be a stretch.
Okay, so you would say still be aware of possible hacks. So there is still work to do. So turning to you, Adam, you are actually, you have a long history in the traditional finance, and so you know by both sides, and maybe you can give us an insight as we see blockchain and all these blockchain risks and also the technology risks are pretty new, and it's very difficult to get a grasp on this. Yeah, but I think this is also familiar for traditional insurance. So maybe you can give us some insight how, from your experience, the know-how of traditional insurance companies can help us to address a new and innovative risk in the DeFi space, and what's your role in this?
Yeah, so one of the interesting things that I've been able to see, and one of the unique things that's happened, was when I started learning about kind of the blockchain space, and this was really only 2 years ago. I started to look at it, and I looked at Nexus Mutual, obviously, looked at a company called Insurace, if anybody's seen them, Uno Re, a couple others that are out there. And I started to look at what they were doing. I started trying to determine pricing, because ultimately in the traditional world, we care about the capital and how much return does that capital get, and is it adequately priced? But then the flip side is we look at the buyer, and is the buyer willing to pay premium on it? And I started trying to figure out some of the pricing, and I couldn't. And I'm married to an actuary. So then I, of course, turned to the real smart person in the room and asked her. And an actuary, for those of you who don't know, basically sits around and calculates probabilities. That's effectively what they do. My wife is a math and stats double major from the University of Minnesota. So it tells you how exciting our conversations are in that. And I started asking her questions, trying to say, can you determine, is there any actuarial model behind this? The answer was not really. And so we started to look at this from the traditional space, and I said, well, what's the problem here? She said, well, the first problem is we don't have data. There just isn't an adequate amount of data right now to determine how many hacks are happening or how many breaches have happened. What's amazing is that the technology actually exists. I mean, blockchain and distributed ledger technology creates the data for us. It's not like where you have to determine whether or not a certain claim happened, where you've got to either read newspaper articles. I know people who write directors and officers insurance traditionally, and the first thing they do is they go to Google and go to the Wall Street Journal and find out how many claims have been filed. We have the data, the inherent data for the blockchain exists. So the question is, how do we go about quantifying that data? And what I've really seen over the last 24 months is we're starting to see more companies who are looking at this from a traditional actuarial model, which is really kind of the core base of modern insurance. I mean, underwriters in Lloyd's 200 years ago basically would sit around and say, whose ship sank this year? Okay, 3 ships sank. And how many voyages were there? 400. Okay, well, here's our probability for the year. And that's how they price their insurance. We've become a lot more sophisticated over the last 20 years in the actuarial side of things. And that's now flowing through into the blockchain space, allowing some of these companies that originally were sort of doing it the old way of our rough probability is X and this is how many exposures there were and this is how we price it. Now they're starting to get in and they're doing actuarial modeling where they're taking and running simulations saying, we know that there's X number of events. We know that this is the breach, and underwriters determining what they think the probability of loss is. And we're coming up with rough rate calculations. Where we're going to go is probably going to explode much faster than the traditional insurance space did, because it took traditional insurance space and lots of paper and pens and ledgers to determine what the actual calculations are. Now that's all being done in Excel and done in a matter of minutes. Well, now we can pull that data directly from blockchain. And that's the real innovation I've seen is we're starting to see people who are gleaning some of this data, taking those data points, putting them into some sort of Excel file, but then that file is being manipulated and run through actuarial models to determine the actual calculation. And that's the exciting part for me is I think the ability to provide efficient, capitally efficient insurance at a reasonable price to buyers. And I was interested in the presentation we just saw, because as more data becomes available, it makes it very easy for TradFi to kind of morph over into the ecosystem because of the data.
Okay, that looks like traditional insurance is actually going to move completely over to blockchain sooner or later. Would you support this claim, or would you say there is a coexistence which will last forever, and there is a specific niche for blockchain and a niche for traditional, or is this a general move like we all use internet and fax is no longer used except in Germany? So what would you say?
Yeah, I think there's no doubt TradFi is coming. In fact, if you start to look at a number of the insurance companies that are operating right now, even some of the DeFi protocols that are out there, Insurace being one. Insurace is currently in the Lloyd's lab. And so they're going to end up getting support from some of the traditional Lloyd's syndicates. And that's going on in more ways. Names has its vehicle that allows DeFi protocols to effectively attract reinsurance. But bringing in the traditional insurers isn't necessarily a bad thing. It's bringing more capital into the system. And I think one of the repetitive things I've heard, which is scaling. How do we scale insurance? How do we provide enough limits to mitigate these large catastrophic incidences that have happened? And we need more capital into the system in insurance in order to do that. And so I think that there's no doubt traditional insurance is going to come in, but I don't view it as a bad thing, because it's like somebody, I forget which talk it was talking about insurance is not a sexy thing. It's not something we wake up in the morning and go, well, guess what? Today I get to buy some insurance, guys. That isn't something that happens. It's something that you buy as a result of either a regulatory reason or a catastrophic loss where you've lost a lot of money. I still have 3 ETH sitting in an FTX account. Maybe probably not. But that has happened, and that's a loss that I'm not real happy about. So of course that makes me think about what exchange am I working with, and if I'm using one, or if I'm not, what sort of protections are in place for me? That's going to only continue to grow over time, because people aren't going to accept situations where, oops, I just lost $100,000 because of some stupid hack that wasn't monitored, wasn't in a smart contract that was audited. Institutions care about that sort of stuff, so it's not necessarily a bad thing seeing TradFi come and support the space, even if they don't do it directly, even if they do it through a proxy, through a chain proof or some other entity that allows them to support the insurance space.
Okay, thank you, Adam. So this leads over to Yulin. You come from also the traditional space. I think you have been working for some regulator already also, so you know also both sides, both the industry and the regulator. So you made a decision to work in this decentralized insurance space. So what was the reason? And is there something what decentralized insurance can fix what traditional insurance cannot fix? And especially in your area.
Yeah. Thanks very much, Crystal, for the question. So I feel that, needless to say, there are a lot of problems in traditional insurance at the moment. And it's worse for the people who earn the lowest income in the world, who are most vulnerable to things like climate risk and climate change. Because, I mean, like a 90-day claim is not catastrophic, maybe for me or any of us in this room, but it can really make a whole world of difference to, you know, somebody who survives on minimum wage or a farmer, right? So for me, I feel that there are a lot of problems in traditional insurance when it comes to operational efficiencies, paying out claims, making expenses as low as possible so that premiums are affordable, that have not really found a solution despite there being a lot of innovators and insurtechs in the space. And I feel that really blockchain technology really provides a promise of providing something new. I would say that one key difference between sort of the impact space, so inclusive insurance, insurance smallholder farmers, insurance for the low income, one key difference here is that we've not really been able to approach it in the sort of a crypto native way, the same way other decentralized insurance protocols have been doing. And which is why I think for this traditional insurance plays such a huge role here, right? In terms of things like, let's say, intimate knowledge of the local climates in Africa, for example. That's something that only the traditional insurance space still has at the moment, and we need to work with them. Right, so that said, I mean, in terms of how I feel this technology has really brought added value to the inclusive insurance space, I would just sort of boil it down to 3 points, which is really speed, cost, and transparency. Transparency, we all talked about, right? There's just the power of being able to monitor the security situation real time, very valuable to regulators. And many, I think all stakeholders who are involved in inclusive and impact insurance value that kind of real-time monitoring. Costs in terms of just automating lots of insurance processes that were previously done manually. And in fact, we still see a lot of issues with that now, even in the parametric insurance space where technically farmers don't need to file a claim, but there's still a lot of manual processes involved, which smart contracts have really helped to automate. And costs as well. So in a sense of when you replace these manual processes with automation, it cuts down the time that people spend approving decisions, checking data in Excel sheets, which, you know, duplicates a lot of work that that just shouldn't be so in the first place. So yeah, those 3 points.
Can I ask a quick question? I'm just curious about, so microinsurance has been obviously quite popular in Africa, but one of the problems seems to have been the lack of adaptation. Do you see that do we need to do something more either as an industry or maybe, you know, working with some sort of coalition to educate the end user, the end buyer of these policies and people getting the policies? Do you think there needs to be more education in this space? I mean, is it more of a technological limitation, do you feel at this point, or a lack of information that's been provided and education provided?
I think with any hard problem in the world, it's both, right? And on the insurance awareness side of it, that's definitely been an issue. In the sense that when you're talking about people who don't have a lot of money to spend and they will prioritize what they spend on, it's quite, I mean, why spend on something that has uncertain long-term benefits as opposed to, you know, just putting food on the table for the next farming season or something like this. So there's been a lot of work done by international organizations into awareness, and aware that there has been some positive results, but there's still a huge gap because there are about 500 million smallholder farmers in the world. Only 3% are insured, despite the best efforts and a lot of donor money going into insurance awareness efforts. So I feel from that point of view, that's where the transparency aspect of blockchain can really make a difference. Like one thing that we did in the Acre Africa project in Kenya was that we built in a feature where farmers receive updates on their policy status on the weather data. So they kind of know on an ongoing basis, okay, I have an insurance policy and I know whether it's been triggered or not. And farmers have reported that, hey, this really helps to improve like my understanding and my appreciation of insurance. Adoption of technology is definitely a thing. I mean, in Kenya, we are lucky in the sense that you have a relatively high proportion of people who have access to mobile phones and to mobile wallets, but definitely in countries where people don't have access to that, that's still a problem because it's not really possible to make an end-to-end seamless journey when the the person doesn't have like technology literally in the palm of their hands. Yeah.
Maybe it's also I compare it to the East Germany, West Germany. Yeah, when East Germany joined West Germany, the phone network in East Germany was completely corrupt, and you need to wait years to get your phone. Then East Germany was renovated, and they got all these fiber optic infrastructure. So within a few years, East Germany had a much better phone network than West Germany. Yeah, so. Is it also something what could happen that, for example, in the emerging countries, the adoption of innovative financial protocols is much faster than in the established countries or in industrialized countries? Would you share that?
Sorry, what was the last one?
Would you share this view, or what are your
I see.
experiences?
Yeah, I mean, definitely if I reflect on my experience, I mean, I'm from Malaysia, and if I reflect on my experience moving to Germany, I can definitely corroborate that. I mean, just in terms of, definitely there are developed countries, I would say, that are more dependent on paperwork, who sort of trust, you know, they need to have this file, this paper in front of them. They need to submit claims on paper, enable to sort of trust the process. Whereas we see, like, I recently went back to Malaysia a few weeks ago, like a couple of months ago, and it really impressed me, the array of mobile wallets that are available in Malaysia, and just the fact that, you know, everyone's very open to the idea of just scanning their phone to make a payment, and everyone knows what's the best wallet out there and all the different ways you can pay for something in 5 seconds. And I think that's definitely, internet connection in Malaysia is also a lot better than where I live in Germany as well. So I definitely feel that, yes, in a way, when you start from a cleaner slate, there is an opportunity to sort of leapfrog some of the hurdles, the bureaucratic and the infrastructural hurdles that have been put in place in more developed countries.
Okay, thank you. So talking about hurdles and challenges, Richard, in nearly every blockchain conference, it's always the same question: how can we achieve more adoption, and what are the main blockers for mainstream adoption? So obviously, safety and security is one major topic here, yeah, because people need to feel safe. If they enter a new technological space, they want to feel safe, they want to know what's happening. And so what would you say? What role could protocols like yours, or security in general, decentralized insurance, what role could that play in for mainstream adoption of blockchain and crypto in general?
Yeah, I think it all comes down to UX. Like, I mean, just to go back to your East Germany, West Germany example, it was very interesting. I didn't know about the fiber optic cables leapfrogging. But in a sense, Web3 is kind of East Germany, and the world is West Germany. If you take the analogy to another layer, right? And so we have a chance to try some stuff in Web3 that, you know, I guess if you're like operating a car insurance company, you can no longer really try it, because car insurance has been extremely optimized, and you know, really smart people like Adam's wife spent their whole career figuring out exactly what's the probability of that happening. And so I think having a more undefined space, it actually helps to come up with some better approaches. And things like, you know, having automatic payouts, having, you know, events that are just monitored live. And so getting live payouts for those events, you know, having like smaller amounts of insurance and doing micropayments for them. Like these things, they could be done in the regular West Germany. But people in the West Germany, they're already very used to how they do stuff. And so there's such a large market there that there's no incremental gain to try this kind of like.
So that all boils down also to education. How could we better educate people about the also the better security of blockchain protocols in comparison to traditional finance? Yeah, so actually we have very secure protocols. Is there still a gap, or what can we do? Do we need to join forces to do better education for people who want to join? And how can we transport this level of security, what with your help we can offer in the blockchain space?
Yeah, I think in the blockchain space, there's been a lot of negative education in the last year and a half after the Terra Luna depegging and FTX and Celsius and BlockFi. Mostly there's been sort of reverse education that's been happening. Obviously, like, for the people that sort of believe in the decentralization, we can sort of say, look, like, FTX, that's a centralized entity, that they don't actually have a decentralized protocol like Uniswap. But I think for regular people, it's sort of all bundled together into, this notion that crypto is unsafe. And so I think it's kind of the role of, this like new generation of security companies and insurance companies to really like demonstrate that. And luckily there's now enough battle tested protocols that are, I would say, extremely safe. And with every, passing month, we get more data that it is, really safe, and we get better tooling. And so that's, we're on kind of a long-term, it's like a marathon to change that, broad understanding for people, right? It's not something where like it can be changed in a day. It's a process over time.
Okay, one question to John. What would be a product which would help to get more mainstream adoption for example, for everyday people, yeah, not only for the big ones, but if my friend is asking me, I want to engage in this blockchain, I want to buy crypto, how can I do it safely? What would you recommend him? And is there something what is missing, or do we have already all the tools and all the products available?
I'd actually like to start with an observation with what Richard said, which was, a good number of us lost some money in the last couple of years because we've had quite a few hacks. Each year has bestowed upon us several $1 billion worth of losses. Adam, I feel like there might be enough data now for us to price this risk. So we can actually quantify and price what that risk means against those events that trigger those losses. So I'm thankful that these things happened when the number of users, the adoption, was relatively tight. This is a good thing, I think, because it means that we are hopefully more vigilant. Those of us who build protocols, those of us who build tooling and who do audits and do monitoring to try and keep all of us collectively safe. So I want to just, if everyone could just say, let's just count this as a blessing that we've only lost several $1 billion with a much smaller number of people. Because if mom and dad and grandma and grandpa were on this, it would be a much harder lack of education, miseducation that we would have to undo. Okay, so that would be the first thing I would say. The other thing too is that if we actually want to provide insurance outcomes with real world events that are triggered, we're also going to have to get even more robust with how we bring real world data on chain to trigger that. So if we want real world folks like mom and dad to come and play, not just move crypto around, trade crypto, speculate, gamble, we can actually solve real problems beyond those really fun problems, then we still have a lot more work to do. So could I say that we have a tool today or a service today that can help everyone feel okay? No, because as humans, we need more than just code is law, mostly because most of us, first of all, don't know how to read the code to tell if it's true. Right now, we trust, not to get political, but even just trying to figure out if the news that we are receiving is true is hard enough. So now if we're saying, oh, we'll just go read the code, go check it out in GitHub. Well, that's clearly not a way that's going to work. So we're probably going to need some measure of, dare I call it, certification, a certification rubric or something that allows us to say that this code has been audited, that we know where the data came from. And this is actually a problem that blockchain could, Bitcoin solves this. Well, blockchain might solve this idea of where we get data that informs our AI-driven outcomes, which is a challenge right now. AI is a very centralizing mechanism in our lives. Blockchain helps us to potentially decentrally determine if an AI output that I receive actually comes from data that I can trust or that has been verified. So we need more tooling. I think we are not close to that yet. I would love to tell you that I know what the Holy Grail is to that. That is also above my pay grade. Lots of things are above my pay grade. Just for context, so I'm a strategic advisor to Hypernative. I'm also an early investor in Hypernative. I co-invest with an investment fund called Kinetic Capital based in Hong Kong. So I lead a few different lives. And one of the things that we've experienced in the past couple of years, other than those amazing losses and all the data that we've gleaned from those losses, is we've also learned that there are a lot of different methods for potentially building these layers that I'm postulating in the abstraction, right? And we need more of that competition. So what I really want to educate the normie community, and that's not a pejorative in my eyes, is that there's an opportunity for you to come and participate as a business developer, as a coder, as a developer, to come and participate to figure out the solutions to these problems, and that we're just very transparent about it. That was a very long-winded answer. Thanks for bearing with me.
Thank you so much. Yeah, we have been talking a lot, but maybe our audience has also some questions. So I want to open up, and if there are any questions from here, from the audience, then please feel free to ask one of our panelists. And we have not time in abundance, so let's keep it short question, short answer, and but just to give you the opportunity. No questions. Okay, then everything has been answered.
If there are no questions, I have a question.
Okay,
for them.
Go ahead.
So actually, it's like John and Richard in particular, I was just wondering, do you think if you were to explain to mom and dad or a smallholder farmer or something, why you think security of the blockchain is not an issue compared to TradFi software systems, would you be able to do that?
I'll take a swing. I don't think I can tell them that security today, in this moment in time, is necessarily better. But I believe the ceiling is higher. And the reason why is because we have the potential to make more things transparent, more trustlessly verifiable than we do with traditional systems. That excites me. That's why I came into this space, actually. It wasn't for the gambling. It was because these are systems, decentralized systems, we use that word a lot, that allow us to just trustlessly verify, and that's exciting.
Okay, then one last question for each of you, but please answer with a one-liner. So if we are looking in the future, the panel title was Securing the Future. So what is the message of each of you to the world or the blockchain community? What is the most important thing to think about in the next time, in the next year, for you, for your customers, for your team? What would you give? What message would you give to the rest of the world? Julian.
If I were to start, I would say that the world should be very excited about the new possibilities that DeFi can offer in terms of structuring products for people who need them in a way that was never possible before, and that was always fragmented because things like pensions and insurance and derivatives are always regulated separately and provided by different institutions. But now there's a way to sort of restructure that in a way that could actually provide a seamless financial solution for people who never had a chance to access all the solutions in the first place. So that's my key takeaway from this.
I guess my key takeaway, user experience, sort of the number one thing, and that's the thing that's going to take us to 1 billion users. So, yeah.
my key takeaway or thought process for you is ask yourself who you're doing business with every day online. Ask yourself who your wallet is transacting with, and are they reputable and are they insured? Because if they aren't, think about the funds that you're putting at risk every single day, and would you do that in the real world? Because if you wouldn't do it in the real world and you're doing it with your MetaMask wallet, think about that and then start analyzing the companies who stand behind that and the risks that they might pose to you and your assets, and then align yourself with companies who can provide the correct risk mitigation and protect your assets the way you'd want them protected in the real world.
I love your answer. Richard took mine, but we think alike, so I love it. I think that just to build off of yours, I would extend it beyond who am I doing business with to am I comfortable potentially doing business with a community of people at the same time? If I transact on any proof of stake blockchain, for example, I am entrusting a community of service providers to secure that ledger, for example. So the idea of transaction is going to feel a touch different as we start to participate in community-based mechanisms as opposed to I'm doing this one thing with one counterparty. I think that my mom and dad will have to adjust to that.
Okay, thank you so much. So I would like to conclude with also my remark on Adam's. Stay safe, stay insured, engage with all these protocols which are discussed today. Thank you to all my panelists. It was great to talk to you and for all your answers and insights. And I hope we can reconnect next year in the next round of the OneConf. And I think we are still in the early days. And looking at the market cap of all the insurance protocols on chain, it's still ridiculous. Yeah, so we have a bright future. There is a lot of space for collaboration. I think that's also very important. And yeah, let's go on and work on this. Thank you so much.